Hey guys, good morning. May 19th, 2020. Didn't have an email out yesterday. I was super busy with trading. It was a great day for trading. Hopefully you guys followed my advice on YouTube that we did not break the neckline, head and shoulders, and that if anything we were going to create more frustration for the bears as indicated in the video title. Couple comments this morning. Looks like the China stocks are probably going to get a little bit of a bid, so stocks like MOMO look kind of interesting. Before I do that, though, let's get this out of the way. The XLE Energy ETF looks interesting here, that we started to fail above this momentum trend line, breaking the 20 and the 50-day moving average. I've been using a 45. I've mentioned that a few times, so they're both pretty closely correlated, but breaking both of those and then reversing back the other way and getting back above the momentum trend line. If you look at the descending trend line here, it kind of looks something like this along here. And there's the top, there's some retests, and then this is when you break out of the bull flag wedge, you go back test that line. So if we look at this line right here on energy, you can see how we back tested it, we popped back up again, and we started to have some horizontal channeling, and we back tested it with a tail through it when the market was getting a little bit sketchy there. Now we fired back up, and then the gap yesterday we cleared the momentum trend line. If you look at this line here as well, and we create a channel, you can see that channel on the top had 1, 2, 3, 4, 5, 6 touches, and now we've cleared that. So as much as it doesn't make any sense, the energy sector looks like it's still climbing a little bit higher. We're obviously in the gap from a horizontal perspective up to the 41. I don't think we reach there, especially in this leg. It seems like we're overdone. That's why I've been playing oil short a little bit to see if this is maybe a false breakout. But I'm keeping really tight stops because I don't want to get burned on this move extension that we're seeing here. There's a little bit more room on the RSI as well, and we're positive on the MACD, but it just shows you longer term that this could be in play for a continuation move higher. You just have to be cautious. Momo looks kind of interesting as far as the Chinese stocks. We got back above the 20, but we still haven't hit the 50. I kind of like it because it almost looks like the financial ETFs where you back tested a little. You have the first shoot out of the gate, you pull back. This pulled back more than I expected. You almost had a double bottom here, but you really didn't. And then you fire off the descending line, right? You break that, and then you go, and then everything's good, and then it kind of gets a little bit weak here with all the China tensions, I suppose, because the earnings were fairly solid on Momo, and now you're back above the 20, so we're kind of neutral here, but at least from a risk-reward perspective, if you put your stop in, I guess a close on 21.30 would be probably pretty negative, which is the low from yesterday. So I use that for momentum. For buy and hold guys, I'd say a close below 20.70. And then obviously your target would be, on the high end, would be 23.20 and then 23.85 on a Fibonacci, and then you have a big gap all the way up to the 200. So stuff like Momo looks interesting. Obviously, the real estate stocks I think are going to be in play here. Norwegian cruise lines or cruise stocks are going to be in play, and probably the hotel stocks like, what is Starwood Hotels? I believe SHC or something. I can't remember, but Starwood Hotels looked interesting when I looked at the chart. I'm not sure if this is a trust. Let's see, Starwood Hotels. I'm not sure which one that is. But look up Starwood. It looked interesting in the chart. It might be STWD. I like these because they really haven't gotten going and they're so far down. And they're even off their recent trend line highs. This looks like it has a little bit of wiggle room. It's gapping up a little bit this morning. So these are probably in play, at least to the 50, which puts you at 13.30. So just interesting plays here. Marina, we were shorting yesterday, Moderna. After hours, they announced a secondary offering. I just think this company's so overvalued right now. It's hard to believe that they're up this high, but you know, just in general, the market here, this might be actually a play off of maybe if it gets a little bit lower, 72, 73. I'm not interested in here. I think resistance is around 78 and change. But just the market in general here. The problem is a lot of the traders are trying to be economists, and they're on YouTube saying the market's going to leg down here, and that, you know, all these videos, market crash watch update, yada, yada, yada. When you're in a bubble, and I'm not saying this is a bubble, we'll probably know in about 7 to 12 months whether we're in a bubble or not here. Just like in the real estate bubble, you know, a year before it collapsed, I could kind of feel like things were getting bubbly. 4 or 5 months before the collapse, I was like, wow, this is a bubble, but I didn't really know how long it would last. So trying to time a bubble is difficult. In other words, we could keep going up here, and then next thing you know, a year from now, we're down below the lows. You just don't know. But as a trader, you should recognize that if you're a trader, you trade what's in front of you. You're a short-term player. You know, you're not concerned about what's further down the road from an investment perspective. Obviously, you want to have an opinion on what's happening down the road, because for your long-term strategy, like, you know, for my girlfriend, she has a big 401k with Norwegian Cruise Lines. I've had her lighten up on stocks. We've done this before, and we've bypassed big drops in the market. I had her do it earlier in the year, and I'm doing it more right now too as well. So, you know, you can time the market if you've been doing this for a while, but, you know, you have to have an opinion longer term, but you also have to recognize that as a trader, it's only important what you're looking at short term. And what I'm looking at short term isn't really bearish at all on the price action, at least. In fact, unless we probably close below 290, I wouldn't even start thinking about shorting the market just yet. So I'm also looking for QQQ to creep up to that top line that we showed on the channels. This one right in here, the 230. So, I mean, it seems overly stretched here, and like it needs to correct more. It's never really had a proper correction. The only thing it's ever done this whole time is touch the 20 here and touch the 20 here in 2 different points. But as I showed on the Hakanashi candles, you know, we're in wave 5 here. Wave 1 was from the bottom. Wave 2, 3, 4. My mouse is being sketchy. And then 5. So we're in wave 5 here. And the last leg is usually the shortest leg. So I suppose somewhere in the 230 area this should top out. That doesn't mean we go short it. You know, we don't load up on SQQQ. But as we enter into that zone and the market's frothy, we start to take a different stance intraday and think about, you know, green to reds, stuff like that. We just change our strategy. So that's that. There's some numbers in the email, but we have to recognize that the market continues to grind higher here, and we're above some important levels for momentum and support, so we don't want to go crazy shorting the market just yet. Crude really quick. CL on light sweet. It's kind of like an indecision here. This is the line that I used over the weekend. Whoops. And it's touching that line right now. We'll find out how accurate it is. Obviously, I shorted Crude yesterday and made some money. We were live on Twitch when I was doing that, and we sold out of SEO because we recognize that it's still strong here. So to go against the grain is not something I want to do, where I'm going to hold it. But yeah, intraday we're picking our spots. I don't know why Thinkorswim. By the way, if you guys are having trouble with TD Ameritrade this morning, look at this. The whole thing is jacked up. I can't even put orders in. So we'll finish on that note, and then hopefully I'll be able to trade today. Things will open back up again on Thinkorswim, and we'll do a follow-up email or video later today. But that's my thoughts on the market right here. Nothing crazy stands out. I haven't looked at anything because of the problems with the market with Thinkorswim. But yeah, if we're in a bubble, we'll know that. Don't fight it for now, but recognize it, the potential of it. There you go, and we'll determine that later on. Obviously, when we come out with the next quarter's earnings, you're going to start to see some disappointments, I'm sure. Reality will start to set in soon enough. Everything else indicates a long-term bottom in the market. Excessive fear, put-to-call ratios, volume indicators, extremes in stocks under their 200-day moving average. I mean, we've seen all the things that indicate a bottom, but we also recognize that this is a very unique time in the market, and history might not repeat itself on a level that's commensurate to what we've seen in prior market bottoms due to financial crises.